Assalamualaikum. Good day to everyone. My name is Ahmad Shafiq. Today we are going to discuss and compare about first things first. The value proposition that we are going to take a look at from the Islamic finance are free from interest or riba, the vision of Islamic banking, and halal permissibles and haram forbidden activities. What is the meaning of free from interest or riba is riba takes advantage of the inferior economic status of a man, race, hate, envy, and ill will against the wealthy, and eventually this action breaks the spirit of mutual interaction and turns people away from compassion towards each other. For the vision of Islamic banking, it means that changing the whole economy from a debt-based relationship to an equity-based partnership and risk-sharing, the primary banking structure and corporate transactions. It offers a methods of managing the economy and calls on all to be participating in the equitable model. This is opposed to the conventional system in which the whole economy is based on money making on speculations. For the halal permissibles and haram forbidden activities, there is also a market for certain products or services including the production and sales of liquor, pork or gambling. If the goods and services are unacceptable, it is clearly forbidden by the Sharia. Furthermore, now we are going to take a look at the conventional finance for value proposition. The first thing first is interest is king, the vision of conventional banking, and everything is permissible as long as it is not contradict with the law and regulations. What is meant by interest is king is that conventional banks take funds at a low interest rate from depositors and lend it at a high rate of interest to the borrowers. Interest culture gives rise to despise and class struggles. The issuers, moneylenders, and capitalists raise the savings of poor citizens by interest. The creditors will not repay the loan on time if the firm is losing money on interest. As a result, the interest of the lender increase further, which is nothing but oppression for the borrower and create hatred and adversity between the society's people. For the vision of conventional banking, the key financial goal of the conventional banking system is to accomplish, by interest differential, the maximization of shareholder capital. As long as the poor citizens or difficulties in financial services are willing to compensate, the system does not care for the poor. They will certainly continue to take advantage of them. And what is meant by the everything is permissible and as long as it is not contradict with the law and regulation are every items that are able to trade and use in the financial markets are permissible to use. There is no haram and halal activities implied in the conventional banking system. Now we are going to take a look at the operational mechanism from the Islamic banking. There are money is just a medium of exchange. Real asset is the product. Loss is shared when the organization suffers loss. And in terms of Sharia board, Islamic banks have a clear Sharia regulatory structure which accepts transactions and items in the light of Sharia law. Is meant by money is just a medium of exchange. Real asset is a product or except for such particular situations. Islam does not accept money as an item for transaction. Money have no fundamental utility. It's just an exchange medium. Each unit of currency is 100% equal to some other units of the same denomination, so there is no space for profit by the intersecting trade of these units. What is meant by loss is share. When the organization suffers loss is in the event of a loss in the funding of Musyarakah. All the Islamic scholars are anonymous in that each partner is suffering a loss clearly according to the ratio of their investment. Thus, if a partner has invested 40% of the capital, 40% of the loss must be suffered, not more, not less, and in any situation to the contractory invalids the contract. The last one is what is the meaning of in terms of Sharia board. Islamic banks have a clear Sharia regulatory structure which accept transactions and items in the light of Sharia law. The Islamic finance regulations are drawn from the Sharia. The Sharia is an Islamic jurisprudence system originating from the main sources, the Quran and the teachings of the Prophet Muhammad, peace be upon him, known as the Sunnah. Moreover, we are going to take a look at the operational mechanism from the conventional banking. The first one is, in addition to the forms of trade and value storage, money is an object. The second one is, interest is charged including in case the company suffers losses, thereby no assumption of sharing losses. The last one is, there is no such frameworks is present in the conventional banks. What is meant by in addition to the forms of trade and value storage, money is an object or, according to the conventional banking system, money should be viewed like an asset, purchased and sold to take advantage of variation in its valuation compared to other currencies and assets. The main goal, though, is to promote exchange within and between communities. And what is meant by interest is charged including in case the company suffers losses, thereby no assumption of sharing loss, or no matter what, even in the event that the company experiences losses from the use of bank funds, interest is charged. Therefore, like Islamic banking, is not focused on sharing profits and losses. And the last one is what is meant by no such framework is present in the conventional banks are the provision of such services is not constrained. Conventional bank regulations are a form of regulation of government central banks that subject certain requirements, limits, rules, procedures, guidelines, and instructions to banks. Depending on the region, the structures or legislation is distinct. That's all from me. Thank you for watching.